Well, thank you so much. I'm very glad to be here today. And I just wanted to quickly introduce our panel today. We have Adam French. He is the founder of robo-advice company Scalable Capital. And we also have, to my immediate left, we have Frederik Meheus. And he is the head of international retail technology for BlackRock, as you all know, the world's biggest asset manager. And I just wanted to give you a moment to say a few words about your role.
So my name is Frederik. I run retail technologies, which basically at BlackRock means instead of partnering up with our B2B partners with products, we do the same with them with technology, and preferably actually both of them. We have a history in technology for over 20 years with the biggest risk management system there is out there, and we're gradually moving that kind of system as other systems as well to the distribution space. And part of that we build ourselves, and part of that we partner up or buy other companies to move faster. So that's what we do.
I'm Adam, one of the founders and the CEO of Scalable Capital here in the UK. I founded the business with a couple of ex-colleagues from Goldman Sachs and an academic about 2.5 years ago. The idea in the beginning was to build a direct-to-consumer digital wealth management platform that could scale across Europe. So we're live and we manage client portfolios in 3 jurisdictions here in the UK, as well as in Germany and Austria. And we currently manage about 350 million euros across those 3 different jurisdictions. But most recently we've started partnering with B2B players within the incumbent financial services space. So the first one that we did, actually not in the financial services space, but more in the corporate space, was Siemens, offering something to their employees in Germany. And most recently we actually built a fully integrated robo-advisor for ING in Germany, ING being the 3rd biggest bank in Germany with over 8 million accounts. And we've recently received investment from BlackRock, working closely with Frey regarding this type of business. So strategically using the technology that we've built to help other financial institutions build digital wealth management solutions alongside the direct-to-consumer business that we also run.
Great. Well, and so this, BlackRock's significant minority investment, as I understand it, in Scalable was disclosed in June. Feel free to break the news through Quartz next time. I wanted to ask you, how did the partnership come about? How did that, I imagine it was a long time in the making, but how did that work? Maybe start with Frederik.
Sure. Well, the first thing is that we acquired another robo in the States now about 18 months ago. Something goes wrong with the mic. And then so after that acquisition, we started to work with B2B partners in the States, and we knew it was working. But because the pipeline was quite rich in the States, we either wanted to amend the machine in the States, bringing that to Europe, or find somebody else. And I went for the second option. Luckily found Adam and friends. The way that works is, of course, when you start to look at the different parties out there, you need somebody to introduce you to the team. Luckily, we have a little unit called iShares that sells ETFs mostly through new players like Scalable. So in that way, we knew many players. I then started looking at many of them and found the right one. That is, of course, a selection that initially starts from a long list to a very short list of the ones you're interested in. And pretty soon it was obvious that we wanted to go full throttle on sort of the Scalable side. They had the joy of our due diligence process at BlackRock, so I'll let Adam explain what a joy that was. But we wanted to sort of put a full due diligence on because most of the robos that I saw, I needed a robo that could stand B2B partners throughout, and that same due diligence that the B2B partners would apply to them would actually make it. So that's why it was important to do that due diligence. But after about a year or so, we then signed the papers, and since then we've been actually probably more together between him and I than the wife, or at least me have been with my wife. But it's been a good journey, and we knew there was interest. By the way, it was sort of a hard time for us. We announced the Future Advisor deal in the States, and we had plenty of parties in EMEA and in Asia that wanted to talk to us about Future Advisor, but we had to say, we're going to keep that solution for the US, but we'll look for another one. And so now we're enabled to at least have that conversation with our B2B partners.
And the same question for you, Adam. And one thing I was just wondering, did you always envision hopefully like a more of a strategic type partner, or were you open to just pure investment, or how did that work for you?
Sure. So in the beginning, we didn't want strategic investment because we didn't want to be tied down to anyone. We wanted to have the flexibility to move in different directions. And it wasn't until we actually sat down and I knew the team from the very beginning. As Frey mentioned, we know the product providers, so we knew the iShares unit very, very well. And over time met more and more people in the business and had obviously kind of an insight into what they were doing in the US with Future Advisor, and an insight in terms of what we'd seen in the European landscape, to help us to understand what are the challenges, what are the opportunities. And over time we started to realize that the big opportunity to fulfill our vision, which was to become the biggest digital wealth management platform in Europe, maybe even further abroad, was to start partnering up with people. And so when we collectively came together and discussed this vision, the only real strategic partner in our mind that could help us to achieve that was BlackRock, because of the expertise they had in the US, the connections and the network they had in Europe. We knew there were conversations going on. They knew that we could be part of that solution. And ultimately, every time we met with them, we felt like there was a real share of philosophy. Going back to the kind of the genesis of BlackRock, thinking about when Larry created the business, it was a tech business from day one, with risk management as a focus. And that's exactly what we set our business up to be. Really a flexible, modular tech platform that delivered wealth management, not asset management, but done with risk management is one of the kind of the differentiators for why we are able to attract the mass affluent clients that we do. So it's one of those journeys that took, I think, 18 months in total, from kind of starting the business, getting to know the first people at BlackRock, through to signing the papers. A year or so was talking to lawyers, talking to compliance departments. And I'm really grateful that we did go through that process and we were able to pass it, because we've been talking to B2B partners and we're going through that process again, and we know that we can withstand whatever comes against us. And then also from a regulatory point of view with the regulators, we've been looked at in a way which no regulator or auditor would ever do. And we know that we can withstand those tests as well. So it's although it was tough at times, dealing with legal teams. BlackRock don't hire cheap lawyers. It's great to now have them on our side of the table.
Mm-hmm. Does that extend through as far as just having them there on the board as well? Do you find that expertise helpful? I'm sure you do, but I mean, has that been useful in any specific ways? Or?
A couple of different ways. Obviously, it's early days right now. The deal was only announced a couple of months ago. These things ultimately take time with that size of investment and the long-term strategy. But getting access to that type of person on the phone, we just didn't have before. So that's one very soft result of being able to have BlackRock on our side. But then the introductory network, who you could get introduced to, who are the if you think about the CEOs of the major financial institutions across Europe, they have lines into them, and the people that either sit on our board or are very close to our board have those direct lines into that C-suite. So being able to work out who are what are the best opportunities, where are the best conversations had, what's the best direction to go in, that's insight that we never had before to the level that we have now.
I was wondering about that. I was thinking about the Slack deal that was announced recently with SoftBank's Vision Fund, and that's something that they talked about was, they want to expand in Japan, and they were saying, the credibility and the network, and so that makes sense.
I think a really good point as well, and I think we've seen that already. Before we were known in the UK, we were known in Germany, we were known in Austria, where people had obviously seen our marketing and heard us speak, and where we're more plugged into the ecosystem. But those conversations now are happening Europe-wide. So the borders have just been moved exponentially, and 6 months ago that just wasn't the case, and now it seems like it's a really interesting opportunity for us.
Well, Frederik, you spoke about this a moment ago, but just on that build versus buy question. I just wondered how, because I obviously BlackRock has a very large technology budget of its own. How do you decide when to, which direction to go, and is it, how do you decide whether to build or buy?
Well, I'm sure that this new room knows about it. It's all about time to market. It's about not being the third or the fourth with the solution, but the first. There was no question in my mind that we could build this ourselves. Mm-hmm. But having a solution that you built yourself wouldn't mean that we would have the scalable solution. They are live in 3 markets, which in itself is pretty unique for Europe. We know the tool is the solution is working, right? You see the money flowing in. So it's great that some smart people in BlackRock might come up with it themselves, but they would have no way to then afterwards also test it. So you're speaking 3 years before we could even be close to that solution. And then again, it's not because you have a solution that it works for B2C clients. We've seen that same kind of principle with Future Advisors. If you see the first version of what Future Advisor has versus what it currently has, and it sort of, failed and stood up, it could show better sort of funnel management numbers. That was something that we quickly said, hey, yes, we could amend the sort of solution to Europe, but let's just go with somebody that has the experience live in markets and it works, and in different markets, because again, the States is one lovely big country with one tax system and one language and one this and one that, and Europe is none of those. It's multi this and multi that. That's exactly where sort of, if you look at the things that stand out when we did the deal with Scalable, it's to have that party that it has tested in different markets. So for us, it wasn't a big exercise. We of course couldn't tell that immediately to the market. It of course took more months than Adam and I wanted to get to the deal. But in the end, you sort of put your mind on it and you try to get it across. And again, there's many moments where this could have gone wrong, but it hasn't. We've done other things. We've done different strategies. We've sometimes did full acquisitions. We took big stakes. We took small stakes. We're going to further explore what we need to get, be ready to serve our B2B clients. And so we're already looking into further expansion, not in this particular area, but other areas of technology. And again, some we will make the decision to do it ourselves, and others we won't.
Got it. And also just wanted to remind everyone that feel free to text in questions if you have any. Happy to ask them to our esteemed panel. One thing I also, perhaps I should have done this at the beginning, but I just, how exactly does the partnership work? Because obviously there's the board seat, there's the investment. I know that iShares is available on the platform, but also other products are available. And I just wondered, it seems like it's a little bit, it's strategic, but it doesn't seem like it's pure strategic. There's still, I just wondered if you could perhaps explain that a little bit, and how you decided to go that route.
Yeah, sure. So what we built in the beginning was a very modular platform so that we could handle our own business. So we decided on day one, as I mentioned earlier, to be Europe-wide. So to be able to do that, we had to deal with the flexibility of multi-language, multi-currency, multi-fund universe, multi-custodian bank, KYC procedures, tax. There's so many different variables that you have to be able to deal with. And it's such a meant that we've ended up with a solution which is highly flexible, which means that the deal that we are most interested in doesn't look like any particular deal. It has many different shapes and sizes. We'll rather go in and try and solve the problem than try and offer the solution. So we've seen already the conversations that we've had with the partners that we've integrated with, so the likes of ING and Siemens, and the partners that we're talking to, be completely different in scope. So with ING, you have a kind of a real integration with their core banking platform, but one in which Scalable Capital manages the money. Scalable Capital is a kind of a co-branded partner to them as well, to help us with distribution and to help us offer our service to their clients quicker than they would be able to do otherwise. But with other partners, it's about things like white labeling. So it's about basically sitting in the middle, being able to offer a digital solution, but not with our brand anywhere. With them managing the money, with them, managing the client relationships. And then there's also options for a third party, like BlackRock, for example, to come in and manage the money on their behalf. BlackRock being the largest money manager in the world gives them a unique position to be able to offer bespoke models for distributors to offer to their clients as well. Something that we could do, but we don't have the gravitas that BlackRock has. So there's even an option and a solution in which 3 parties work together to offer the best solution for their client base. So it could be things like, if you're dealing with a firm which really believes in ethical investing, and that's the primary investment vehicle they want to use. That's not our current investment model because we don't believe that we have the expertise in that niche area, but BlackRock do because they cover all aspects of the investment markets from completely different angles. So that's an example where 3 firms could work together to provide a bespoke solution. So the typical deal for us doesn't look like anything. It's really about problem solving and trying to work out the size of the opportunity. For us, ING was a huge opportunity. They have 8 million accounts in one country, 250 billion of assets sitting on their balance sheet. So opportunities like that are interesting, but you have to make sure that the decision makers are also ready for this digital change. Not everyone's there yet, and I think you'd agree with that.
Yeah, I mean, listen, when I said we discovered there was a need for EMEA to have the same solutions, is that as much as we have investment products, people want to talk about what's the new business model for the future. They wanted to talk about sort of implications of regulation and tech and this and that, and that's where we needed sort of what Scalable have, but to Adam's point again, combine it what we already have and make a good total solution in that sense to be able to be the partner that everyone wants to speak to, and for us it's now to make the choice who are the right 5, 6, 7, whatever the right number is of parties in the next 12 months that we want to engage with. Because it needs to make sense to them, but also to us. And again, we're not just limiting ourselves to the countries that they're currently live in, because they have shown us the flexibility to be able to go to multiple countries at the same time. But there's plenty of demand out there, and I'm sure that the deal that we announced, last Thursday, will have multiple of those in the next 12 months.
Got it. And this is and a question from the audience. I wanted to see, and we've talked about this a little bit, but just the cross-border nature of this deal. Scalable being, having operations in Austria, Germany, and the UK. Obviously, BlackRock is global. But I just wondered, were there any particular challenges to the international cross-border nature of this, or was it relatively easy with BlackRock, given that it's a global company, has operations everywhere? Did that kind of smooth the deal, as opposed to trying to do a deal with someone who, say, had just focused operations in one EU country, for example?
From our side, the complexity wasn't around the deal itself, because it's actually from a corporate point of view, we're quite vanilla. We have a German holding company, and then we have a few regulated entities which sit under that. So that wasn't where the difficulty is. The difficulty was setting everything up underneath to actually run the business in a way in which everything looks the same to the end client. If you go to the German site or if you go to the UK site, what you experience as a client is unified, but actually under the hood it's completely different. Because of the the flexibility pieces that I mentioned earlier. And one of those is like how you communicate to custodian banks differs not just from country to country, but from institution to institution. So you have to have all of those channels, all of those connections built in a way in which nobody knows there's a difference, but you really do offer that flexibility behind the scenes. So for us, that was where the complexity was, less about the actual deal. You guys have a Munich office. We have a Munich office, and we're going to be very, very close with the team based there. Our London office is a 10-minute walk to the BlackRock London office. We meet there quite regularly.
Yeah, and we're already also looking into what can we further do together. There are thoughts on the left-hand side, on the right-hand side, and just you need to sort of sit around the table. It's also the product, what it currently is. It is what it is, and it's very good. But we also have plenty of ideas already of what's the next thing that we can take it to, and whether it's there's way too many clients who come to Adam or myself. We want a robo-advisor right now. Then our first question is, how do you see that working with all your advisors you're having right now? So there's then thoughts around sort of a hybrid model. There's people that indeed want the passive solutions, there are people that want active and passive solutions. There's then a whole raft of thinking around regulation and how do you apply what you currently have in the different markets. We thought already that they were the most informed party in that sense, but luckily you have a whole regulation team. So it's about now putting those kind of people together and make sure we have continuously the best product out there.
And I wanted to ask a few industry questions as well, just speaking broadly about robo-advice and wealth management. Whenever I think about the model, if I think about sort of the ground level startup, completely on its own, complete organic growth, like a Wealthfront or Betterment at one end of the spectrum, and then maybe like Vanguard at the other end of the spectrum, or Schwab, an existing incumbent starting their own solution. It feels like with your partnership with BlackRock, you're kind of in the middle in a way. But I just wondered, do you think that the pure organic model, just doing it completely from the roots, can ever really catch up? Because it looks like the assets under management for other strategies are growing much more quickly.
I think it has its benefits to be completely independent. You can look at the whole of market. You can be a lot quicker to innovate. You're not tied to any old cultural or incentive schemes that are currently in place. I think that's the great thing, and that's why we started our own business, so that we could really build with that philosophy in mind. The challenge, and it's been well documented in every market, is customer acquisition. And when we think about our vision, why we set it up to be the biggest in Europe, it's not going to be easy to do it just by ourselves. I think we did a really good job in the beginning. We acquired 300 million ourselves, not spending too much on marketing, very, very happy from a kind of a cost of our customer acquisition point of view. But ultimately it would take us longer than it will with partners to be able to get to the size that we feel is a point where we can say, this business is a success. And we've already seen that from the partnerships that we've already got in place. We've seen what type of leverage you get by having multiple distribution channels. If you look in the UK, for example, the deposits market is owned by 4 big players in the banking space. That's a relationship which is hard to break down. Incumbent wealth manager relationships, hard to break down. If instead you work with them to provide technology, and you end up becoming the player which doesn't have assets under management but rather has assets under technology, I think it's a really interesting space to lead in different fronts. For us, having the direct-to-consumer business is great for us to learn, speak to clients, understand their needs, to innovate, but then having B2B partners that we can work with together to find solutions as well kind of brings the best of both worlds. I think if you ask, if I think about 5 years from now, where do the assets sit? I think the majority will be with B2B partnerships or with the B2B players in the market, just because of the ease of how easy it is to bring on new clients. Like look at Vanguard and Schwab in the US. We'll have to, I'm sure we'll announce soon kind of our partnership stuff, but that it's clear that if you have millions of clients already, it's going to be easy to attract tens of thousands, if not hundreds of thousands, to a digital service if it's providing something better than what they already have access to.
And Frederik, just on that customer acquisition point, Scalable's already benefiting from just the media interest in the deal, for example, which helps get raise the profile for Scalable. But how do you promote Scalable within your own business, or do you leave that completely up to the company to market itself? Or I just wonder how that part of the relationship works.
No, I mean, you ask Adam or in Germany, Eric. They're being busy, and we're going to make sure that they keep on being busy, because you know what, clients come to us and they want the solution. So we know there's actually clients out there that have asked for meetings. We just haven't gone to that market yet. So again, when we signed this partnership, it was like this was a silent period. Now we're going to get busy. I'm not sure they understood the silent period comment because they had the due diligence on our side. But we're very actively marketing, and part is just at this point sort of reacting to the questions that we have had, so that there's plenty of segments that we haven't even thought about fully that we'll park for a calmer day. But for now, it's busy, and we'll make it busy, and we integrate them in a sort of a fuller solution that we offer. So we embed Scalable very, very firmly into our proposition overall.
It was a good example of that. Where just only a couple of weeks ago, I attended a BlackRock internal offsite, which was hosted at Sandhurst, the military college, and it was the global iShares team that was there. So there were people there I've never met before because they're sitting in all of their European regional offices. And we had a slot which lasted about 30 minutes, and I had about 30 minutes of questions after the slot with people so excited about the opportunity in their local markets. Because for them, they hadn't heard of Scalable other than the deal being announced, because we're not live in every European jurisdiction. But as soon as they saw it, the lights were switched on. They thought, okay, now I get the opportunity. Now I see in my market how this might work. So it probably caused a problem for you, Frederik, because now you need to keep the door firmly shut from everyone. But it's exciting for me to understand that there's just, I think, an unlimited pipeline of opportunity out there, because this is going to be the future of wealth management.
One regulatory question I just wanted to ask, are regulations a tailwind for you, or are they a headwind? I would think that there are some regulatory tailwinds for this product, but I just wanted to get your sense.
I'll let Adam answer that one, but I've never seen more interest from European regulators in general on the subject. But again...
we've spent a lot of time with the regulators, either ad hoc or at more formal meetings. The UK regulator has their robo-advice unit. They have their sandbox. So many opportunities to engage, which you don't see in any other industry right now. If you're a utilities company, you won't get that kind of access to a regulator in that space. So I think that's a fantastic starting point. If I look at some of the kind of core concepts which are coming through European legislation, it's about increasing transparency, increasing disclosure, increasing consistency of things like advice. And the only way that you can do this is by, or at scale in particular, is by using technology. And I think that this will hit a lot of people hard when things like MiFID II come into force next year. If you look at kind of digital advice, digital wealth management, alongside MiFID II, I think a lot of it aligns. In Germany in particular, there's kind of one thing which sticks out, is that the advisor community still earns kickbacks. So you would basically get a commission from your product provider. That's clearly not part of our core philosophy. It's about being transparent and showing people what a wealth management business should look like. And I think that's one area, just one of many areas where the core philosophy of the business is aligned with the way that regulation is going. And then if you look in the UK in particular, they have a competition mandate, the regulator as well. And so when you think about accessibility and convenience and education, these are all concepts that the regulator is keen on pushing through, because it just provides people with access to the big social problem, which is how they're ultimately going to retire.
Got it. You don't always hear positive things about regulators when you ask people in financial services about regulation, but it sounds like in this case, they are quite keen to engage.
Yeah, they probably didn't have to deal with the BlackRock lawyers.
And one question, I'm worried we may not have time. Hopefully I can ask two questions, but another industry question for both of you. I just wonder, when you're thinking about what this particular segment looks like in 5 years, how it changes, I just wondered taking what we have now and what's available now, how does it look in 5 years? How does it maybe change society in 5 years? I know that's a broad question, but...
I can take the first one probably, just thinking kind of the way that I see the future. I think of every individual, it's going to sound a bit nerdy, but having like a profit and loss and a balance sheet, and we very much operate in kind of the balance sheet side of things. So the type of proposition the type of people that we really resonate with are people that have already got a little bit of money, because they've already kind of started to see their wealth grow, rather than the challenger banks who are helping with budgeting, which is the day-to-day savings, and kind of becoming flat at the end of the month, or trying to be positive. And so I can really see our business becoming the one-stop shop for people's financial needs who are in the first sector, in the people that are kind of building their wealth up. So I can see, instead of people logging into their bank and looking at transactional data, really coming to the wealth manager and understanding the more holistic, forward-looking picture of their finances. So rather having the banks connect into us, and us become the kind of the one-stop shop for people to have money coming in, have money going out, to have a full picture of all of their assets, outside of financial assets, but also assets which might be held at brokerage accounts, different accounts. You can become almost the aggregator. One day, and I think things like the Payment Services Directive 2, open banking. I think things like that help us to get there.
Yeah, if I mean, again, I've opened up by saying that every distributor is rethinking the model. And most of the past have been about sort of an advisor-led model. And my biggest question is, how does that look in 5 years? But that it will be massively different. We see with some distributors taking decisions to leave thousands and thousands of advisors behind. But that means there needs to be something else. And so what we find particularly interesting, and that's why we did the acquisitions, is there's such a difference in digital engagement versus physical engagement. How do you potentially combine them? That's why the solution as it currently stands, we need to further build on it. I believe in somewhat of a hybrid solution because in the end, as Adam has highlighted, there's so much transparency on the cost. If I have $1 million in my bank account and there's a flat cost on it, whatever the flat cost, it's a high tens of thousands that I pay every year. By the way, in some countries, you need to not show the cost in sterling or in euro for 1 year, but for 5 years. So you're literally looking at the car on your bill. What's the return that stands against that high bill? How engaged is my advisor with me? How is he aligned to make sure that whoever it is, a digital advisor or the physical, makes money for me rather than cost me money? And so that's why you can see that quite a couple of, especially Southern European distributors, who might charge 5% a year to a customer rather than 1% a year, have a big dilemma to solve. And I'm very sure that in a big way, this is a solution they need. But how it will exactly combine with the physical person, I don't know. I do know, however, that what we've learned in all our B2B contexts is that the physical advisor is still very important, that trust in some way, shape or form needs to be replaced by a machine. By the way, I think a lot of people actually trust a little bit the machine too much. I don't know how you think yourself, but the apps and what data the apps gets, I mean, not a lot of people think about it, even if a lot of people in this room know that there's a lot of tracking out there. So I'm a believer that it will be more rather than less. But this is industry, the money industry is still quite a bit of sort of the person in front of you, not always, but at least in some moments in life. So I think it's still going to be a balanced game, but that there will be fewer advisors and more digital engagement is 100% sure. How much, that will depend on how fast the distributors will implement it. That will depend on how fast the regulation will force people to go to serious price points and all those, and those will be drivers of the pace of this game. But that this is a very big industry is certain. We can hopefully in the next couple of weeks see it already through what ING is doing. There's a couple in the pipeline that will watch whether the game will be as big as it is in the US. But the confidence is high that it is.
Got it. Well, I have about 12 more questions, but we're out of time. So I just wanted to thank you very much, Adam and Frederik. Thanks so much for being on this panel.
Thank you.